right, everybody, let's dig into another Rich Girl Roundup, this time about life insurance. As my standard disclaimer, I am not a licensed financial professional, and this is not financial advice. This is just what would Katie do? Here is this week's question from Allison.
Hi Katie, my name is Allison and I'm calling in from Cincinnati, Ohio. I want to hear what your thoughts are on life insurance. I really like knowing that I'll have a nice chunk of savings in about 10 years that I can pull from for the rest of my life for any reason, any emergency, completely tax-free. However, a lot of people have told me that it's not worth it, and I want to know what your thoughts are.
Okay, a question that is sure to bring all the insurance salesmen to the yard. I will open with this. Insurance is a very profitable business, and they do not stay profitable by increasing your returns. They stay profitable because they have rigged the deck in their favor with actuarial tables and data that makes them all but certain that they won't lose. Insurance does serve a purpose in your financial strategy. It protects you against serious downside risk, but it's not an investment strategy, right? It's not a proactive wealth growth strategy. So if you have dependents, and by dependents, I mean people who rely on your income, whether that's a spouse or a child or parents, it's probably smart to implement term life insurance into your financial plan, and a registered CFP professional can help you determine how much and whether or not it actually makes sense for you. So I don't want to say that insurance is completely unnecessary or it's a scam, because that would be unfair. That said, I don't know anything about the details of this policy. You mentioned that you'll definitely have $500,000 in 10 years from now, but I don't know how much you're paying into that plan or how accessible that money is or what types of fees you're paying. But I can assume, based on the language, that you are talking about an indexed universal life insurance situation, and those tend to be quite expensive. So IULs work like this. You pay a premium, some of which goes toward the cost of the life insurance, some of which pays fees, and what's left is added to a cash value associated with the policy. And the cash value is supposed to be indexed to the stock market. So if the market's going down one year, say 20%, like this year so far, the IUL cash value is safe with a 0% floor. But if the S&P 500 goes up, the cash value increases, but with a cap. For example, last year, the S&P 500 was up 26%, but the IUL's growth is capped. So if your IUL is capped at 9%, you didn't get 26% in the market, you got 9%. So historically speaking, over the long term, you are probably going to be paying a premium to pretty substantially underperform the market. I personally wouldn't buy an insurance product like this one. And if you need insurance, term life is likely your best bet, but I would say talk to a CFP professional if you are really concerned and you need guidance, as opposed to a financial advisor whose salary might be paid by the commissions on these types of products. No hate to the insurance people, no shame, get your bag, but for the consumers, know what you're buying. You typically pay pretty high fees with these IUL policies. You got commission fees, annual fees, you name it, which will play into this calculus as well. But out of curiosity, I used a compound interest calculator to figure out how much someone would have to invest to have $500,000 in 10 years if you assume a 7% real rate of return on average in line with historical returns. You'd have to invest about $3,000 a month to hit $500,000 in 10 years. Life insurance is not an investment. It's there to protect your downside risk. And if someone is positioning it as an investment to you, ask them how much money they stand to make if you buy it from them.